Hello, I'm Andy Agathangelo. I'm very proud to be the founder of campaign group Transparency Task Force, an organisation I created in 2015, having spent a lifetime working in and around the financial sector and coming to the conclusion that given the chance to misbehave, it often does. Over the last 10 years or so, we've become increasingly active in trying to speak up for the consumer interest. We think of ourselves as champions of the consumer interest. And to be very frank with you, over the last 10 years, one of the big evolutions in our thinking is that it is often regulatory failure that is at the heart of consumer detriment. I genuinely believe that the topic we're going to be discussing this evening, the football index scandal, is actually a really good example of what can go horribly wrong when a regulator or regulators, excuse the pun, take their eye off the ball and fail to do what they should do. Maybe they should get a yellow card, maybe even a red one. Who knows? Maybe they're offside. Maybe it's an awful foul. It'll be up to you to form your own opinions about this particular matter. It's a complex issue. It's a nuanced issue. It's an important issue because it has affected many people, sometimes significant amounts of money. We're not talking about small change here. We're talking about life-changing losses. The football index scandal is, to my mind, one of many such examples where the regulatory framework has failed to do its job. Or, as is often the case, sometimes the organisations blame each other about who's at fault. Sometimes they stand back and say, nothing to do with us at all. Wasn't me, Gov, so to speak. Sometimes they'll talk about the regulatory perimeter and how and why they can't act. These are the sorts of issues that come up from time to time when discussing matters like this. The purpose of tonight's session is to raise awareness in an evidence-based way as possible about what has actually happened, sticking to the facts as well as sharing some opinions. But each of you here tonight and each of you who'll be watching the recording will be free to make up your own mind about what has happened. But needless to say, if harm has been caused, let's take it upon ourselves to try to raise awareness of that fact and also to raise awareness of what could have been done and should have been done that would have resulted in better outcomes for individuals. Tonight's event is very much driven by David Hamill, who is a leader of the relevant campaign group. David and I spoke just a few weeks ago. He responded to the All-Party Parliamentary Group on Investment Fraud and Fairer Financial Services report about the FCA. That's how we first got connected. I'm very pleased to say that David and I had a particularly constructive conversation, and I agree that Transparency Task Force would be very happy to try to raise awareness of what's been going on, hence tonight's conversation. More about me and us and what we do during the course of the evening. Meanwhile, I'm very pleased now to pass over to David Hamill. David, over to you. Just before David starts speaking, can we please put our hands together, because I know David does a huge amount of work behind the scenes speaking up for the victims of the football index scandal, and he's spent a lot of time preparing tonight's session. So David, thank you very much indeed. You're getting a warm applause as you get onto the pitch, David. Over to you. Time to start kicking the ball. Thank you.
Okay, Andy, thank you very much for inviting me on to today. It's the second time I've actually joined one of these sessions. First time. So also thanks to Alexandra and Chelsea behind this who've helped with the slides and the website, etc. So Andy mentioned 2015, which is coincidentally when the Football Index platform was first licensed. Now, I'm going to use a term that John Glenn, the MP, used to describe London Capital Finance when he published the redress scheme for them. At the time, which was around the time that Football Index actually did collapse in 2021, he called London Capital Finance unique and exceptional. I think a lot of people, and I know from my previous attendance, a lot of people have been affected by regulatory failure. And I don't think London Capital Finance is unique and exceptional. maybe the individual lead up to it is, but unfortunately there seems to be too many of these scandals due to regulatory failure that have happened. Collateral, Blackmore, Neil Woodford all spring to mind just off the top of my head. Where Football Index is unique and exceptional is that it was actually let down by two regulators. So I mentioned 2015. Football Index was always licensed by a regulator, but in this occasion it was the Gambling Commission. So in 2015, the Gambling Commission twice looked at applications for Football Index and provided it with a license, and it started trading in October 2015. It was a brand new novel product, and that is how Football Index, the application, described it. In terms of gambling, companies like B65, Sky Bet, your big players, they tend to work on a gross profit margin of 5 to 6%. The reason Denise Coates takes home £250 million a year is because they do a lot of bets, and that 5 to 6% obviously shows that they're doing sort of 9 to 10 billion pounds worth of bets. Football Index presented a proposition where they'd be earning 80% gross profit margin, but nobody seemed to have picked up on the total difference in that number at the Gambling Commission. So I'm going to focus more on the FCA today, but for those who are new to Football Index and for those coming in later and watching it, I thought I'd give a brief introduction to Football Index, how it was licensed, when the FCA knew about it, unfortunately the collapse of Football Index that occurred in March 2021, and then the actions, especially of the FCA after collapse, and this is the reason I'm presenting here today. Okay, next, and probably 2 screens down, Andy, please. So what was Football Index? It was a innovative online platform for trading. They were called shares in football players, and this was AI generated. I changed things. So AI came up with the fact it combined sports and investment. So from the day it was, and in the application, it was very much for terminology. So words such as yields, dividends, traders, shares were used. Whereas the Gambling Commission have always referred to the purchases as bets. They weren't bets, and I'll discuss that in more detail. So notionally, what you were supposed to do was to buy a share, a bet in one player. If that player cost £1, you were hoping that you would earn more than £1 in these daily dividends that were paid out. The platform evolved, so it was originally players who were very prevalent in the media were attractive. So David Beckham, if he'd been around, would have been a prime example of someone that would have been a good bet. And as it evolved, you could earn dividends and these daily payouts for on the pitch performance as well, which makes more sense, really. But you could also trade these shares. So if I bought a player for £1 and I'd earned 40p in dividends in the first 2 or 3 weeks, that player clearly was going to earn more than £1 over the 3-year term. And I'll get to more of that later. So someone would probably pay me £2 for that bet or that share. And I could buy multiple shares and bets in the players. Eventually, Football Index caps it as 1 million shares per player. So you can see there was a lot of money that was possible to be traded on the platform. So the platform functions similar to a stock market from day one. So you could buy and sell, and you had the option within a year of buying and selling either with other users or directly from the platform. So if you wanted a quick sale, you would sell to the platform and maybe get 95% of what someone would be prepared for it. Because as it was a platform, there wasn't that many people starting it. Liquidity was very slow, and it was taking weeks for people to sell shares. Wanted to buy new players. It wasn't particularly fun. So I've also then on this last slide mentioned about dividends. So however, these dividends were contractual payouts. So if I bought a share from Football Index, they contracted to pay out dividends if that player qualified for 3 years. But if I sold a share to Becky, who I can see online, who I know well from this, after a year, Becky would then get another 3 years. So in effect, these shares never expired. So what Football Index had was an ever-growing liability structure. So they had to sell shares from day one. They didn't want Becky buying it from me. They wanted Becky to buy it from them, so to speak, and they got all of the money. And again, I'll get onto that later on. So because these contractual payouts were over a fixed amount of time, it was never actually a bet. I can't find anything over the last 4 years since the collapse of the platform to show that it was legally a bet. It does instead meet the definition of a derivative, and I will cover more of that as we go on. Thanks, Andy. So what's next is the business model and how it operated. So it was a new platform, a novel platform, but sort of morphing share trading and football. It grew quickly. Predominantly the user base was young male. Becky's one of the exceptions there, but it was people sort of in their 20s, 30s who did like a bet, but also like the trading aspect of it as well. So the business model heavily relied on user engagement, and it had a very vibrant social media community. And people actually set up cottage industries on the back of Football Index, providing data tools and YouTube videos, etc. So there was a secondary market from people who saw an opportunity to profit from it, other than just investing in the platform. So Football Index unfortunately leveraged on this engagement, and as the platform grew, I would say, looking into it in more detail, the financial promotions, especially on social media, were dubious to say the least. And there has been examples of these social media influencers. I don't know many of them. There was one on this Only Way is Essex. They've actually been charged by the FCA and going to court over the last year or two. So again, the FCA have looked into this in a bit more detail. But a prime example, which really sort of went viral, was Adam Cole, the director and founder of Football Index, saying videos saying, if you max out your credit cards, that's your leverage, and as long as your interest rate as long as the dividends paid beat the interest rate on your credit card, you can't lose. And this was actually caught on camera at one of the early trader meets. So again, if this had been regulated properly by the FCA, I'm sure, I would hope, they would have stamped on that pretty quickly. So the platform earned money in 2 ways. I mentioned Becky earlier and selling shares between users. You would pay a 2% transaction charge for that, so quite low. So that £1 that, or Becky at £2 example, I'd get £1.96. However, where the predominantly the income was from Football Index was the minting of new shares. So that would be new players coming into the market. So young players were always very attractive. So Jadon Sancho, when he was in Germany, was the highest priced player because it looked like he was going to have a long career, a successful career, joining Man United, etc. And he was trading at one stage at £15, £16. So that would then go straight to Football Index. And how they recognised the revenue was 100% of that revenue was basically their profit straight away. I can see Andy raising his eyebrows there. And they actually paid gaming duty on that transaction. And there was nothing in the financial accounts when they were eventually released after the collapse. They didn't provide for the liabilities going forward. So the only way they could pay whoever owned that Jadon Sancho share for the 15 years until he could retire, because he was 18, 19 at the time, was for somebody else to come in and buy another share in Jadon Sancho and another share. So they were relying on fresh monies, new users, new deposits. And I haven't put this phrase in the slideshow, but to me, that makes it a Ponzi. And as soon as those new monies stopped flowing into the platform, then it would and did unravel and collapse very quickly. And it was interesting. I've been following London Capital and Finance quite a lot in the press, and that's gone to court and was actually found and adjudicated to be a Ponzi scheme. Slightly different, and that was regulated by the FCA for day one, or the company was, not the product. But I'm still battling to get that kind of acknowledged by government. But more of that as we go along. So yeah, so basically they require prices to continually rise. So if I bought Jadon Sancho for £15, but then his price went down to £14.80, Football Index couldn't mint any new shares for the majority of the time of the platform. They could only do it when the price reached what they described as an all-time high. So if the price was £15 and I bought a share from Football Index, or 900 shares, then the next 900 would be £15 and a penny, and they would get all of that money. When prices started to go down, they would only get the transaction income. So it was in Football Index's interests for those prices to continually rise. And again, I'll touch on that more as we go through. And then, yeah, finally on this slide, dividends linked to performance. So the top rated player in each position would get a payout. These payouts increase as the platform increased in popularity and prices rise to provide a good yield. And there was different ways of winning, but I won't go into that in too much detail. Thank you, Andy. Are there any questions so far? Is it going at the right pace and everything else?
All good, David. Very interesting.
Okay.
Oh, thank you.
I'll take that as a yes then. Thank you. Right, my mouse has just gone offline. Another second. Right, so popularity and growth of the platform. As I've mentioned already, there was rapid user growth. Now, this incremental pricing algorithm I just mentioned, because it was in Football Index's interests for prices to go up, they actually again, I think on social media, but with fancy graphics, far fancier than my PowerPoint, they actually said at one stage that with Football Index, 98% of investors or consumers win, which is astonishing, really, when you think about traditional bookmakers. But also you look at the sort of fancier products like CFDs and spread bets. They are mandated to say how many of their customers lose. And I've done quite a bit of sort of market research, and you're looking at about 75% on sporting spread bet providers saying that is the percentage that lose money on CFDs. So again, it was very much to entice people in that it was a safe, secure place for your money, for your savings and for your investments. Media attention. So the platform's unique features attracted significant media coverage and enhancing its visibility in the market, combined with aggressive and visible marketing strategy. So Football Index was very aggressively marketed and advertised around London. It was in City AM. It was on billboards outside Canary Wharf. It was on black cabs. But also, as the platform grew, they sponsored reasonably popular football clubs, Nottingham Forest being one, before they were in the Premier League. And certainly FA Cup games, you would see 100% coverage around the pitch of Football Index billboards, perimeter advertising. So it was starting to become mainstream in terms of a legitimate provider. And this growing customer base led to increased investments. People started to transfer their cash savings. And what you'd find is towards the end of the month, people would be selling back to Football Index as they needed the money. It was almost like their current account, but they were earning it. And in the time, I can see Cliff shaking his head, but it was like that. But also ISAs, traditional investment, cash ISAs, stocks and shares ISAs, people were putting in their wedding funds, house deposits, because prices were going up. People were making 10% yield and maybe 10% more growth. So combined with Adam Cole stating there was guaranteed yields, Zlatan Ibrahimovic is better than Bank of England base rate, max out your credit cards. It was very easy to see why a lot of people got sucked in, including myself. And I did 30 years in financial services. So I'll give a little bit of background about myself and why I'm a bit of a nightmare probably for the directors of the company and the regulators, because I've worked in this field for a while. So yeah, basically at its collapse, Football Index had attracted, we think, about £95 million worth of cash. So not a big player compared to sort of the likes of Bet365, but open bets or open contractual positions, I call them, at the time of collapse was 125 million. So people had built up their portfolios and reinvested the dividends as well. So these daily wins would tend to get reinvested back into the platform. So although they had a liability, they were kind of sucking the money back in due to for the reasons I've mentioned already. And yeah, there's been some heartbreaking stories, and I've attended MP calls of people who lost everything, marriages, it's been cited in divorces, and etc. So there are some real tragic stories out there. Thank you, Andy. Next slide, please. So, and again, I think there's a regulatory framework and then overview of the UK gambling regulations. AI brought this in, but I think it was an interesting picture, actually, because it shows very much what people's traditional thoughts of gambling are, which is cards and casinos. And just a background, gambling now is very much, because I follow a lot of the anti-gambling websites and everything else, it's all around slots and casinos, and it's really driving that side of the business. Horse racing, it's difficult to become addicted and lose tens of thousands of pounds in horse racing. Not impossible, but when you've got online slots on your phone, on your iPad, everywhere you go, every advert on Sky during the football, every other one is for these new digital operators. It very much is in your face, and a lot of these products, how Football Index was described, is it blurred the lines between traditional gambling and financial services. And I'll get onto that in a bit more detail later on. So despite Football Index using financial services markets terminology, they successfully obtained licenses from the Gambling Commission in 2015. I've mentioned about the ability to trade shares in the market. The Gambling Commission and government have stated that Football Index never told them they could do this. That is factually incorrect, and I've evidenced that, but that's fallen on deaf ears with government, which is disappointing. However, even without the ability to trade these shares or sell them back to Football Index, if you take the initial business model as a starting point, I buy a share for £1, I hope to earn more than £1 over the next 3 years. The General Counsel at the time of the FCA confirmed that is still a derivative and meets the definition of a derivative and would fall within the FCA's regulatory perimeter via legislation. So the Gambling Commission, even the bit they did understand or say they were told about, was still outside of their remit. It should have been an FCA regulated product and platform from day one. Therefore, consumer protection in gambling is very poor. The only protection consumers are entitled to was the amount left in their e-wallet. So, i.e., money they put in and not spent, all these daily dividends into their account. That was all that's been returned so far. All of the 124.5 million or 95 million I said has gone so far. So the portfolio values, and we're talking about portfolio values that were in several £100,000s. Some had over £1 million portfolio values. Not necessarily that was the amount of money they put in at collapse. They were unprotected. Correct licensing by the FCA would have given two aspects of protection. One, the company would have to maintain a minimum balance of £10 million. Doesn't seem a huge amount, but 10% would be a lot better than the circa 1% that consumers of Football Index will get back or are likely to get back through the liquidation process that is still ongoing. But also there would potentially be the ability to claim under the Financial Services Compensation Scheme. Now, I did a little bit of a test case on this last year after I received a response from the Financial Regulator Complaints Commissioner. So I went to one of the two sporting spread bet providers, and I went onto their website, I did a live chat and received an email, and they told me, yes, you will be protected up to £85,000. I then went to the FSCS and asked the same question, and they told me, no, sporting spread bets are not covered. And I think this is a very grey area that someone could do all of the right research, go to the provider and say, am I covered in the event of your collapse, through, financial insolvency, whatever. And then if it comes to collapse, potentially when they go to the FSCS, they could get a different answer. And again, I feel that's a real kind of grey area in financial services regulation and protection that I wasn't aware of. So I thought I'd raise that today as well. So yeah, we had unprotected portfolios, fairness in gambling. So basically the Gambling Commission only has 3 objectives. It failed in all 3 with Football Index, which was source of crime, fair T's and C's, etc. And then responsible gambling. So what the Gambling Commission said is, well, we legislate what is described as a leisure bet, £5 on a horse. You know, we had the Grand National recently, that sort of thing. Not hundreds of thousands of pounds going into portfolios of football players that can pay out dividends on a daily basis. Thanks, Andy.
Just before I go,
Okay. Yes, yeah.
slide, if I can, David. So everything you're explaining is of great interest, and in particular, the issues around whether or not Football Index was correctly regulated is obviously at the very epicenter of this whole story. You know,
Yes.
was it a product, an offering that the FCA could have and should have regulated? So the points you've raised around the relevant definitions are particularly interesting. And I think in this slide at the beginning of it, you talked about there being a difference between what the regulator said was the case and your understanding of what they said. Is that something you're going to be covering later? Because I think you said something like, that's factually not correct. And it'd be particularly interesting to get to the bottom of that.
Yes, I mean, that's a Gambling Commission issue, and it's also a Gambling Commission way of they receive communication from the companies that they actually license. But yeah, I can cover that off. I could probably do that now, actually, on the next slide. Are we at the same slide? Football Index's regulatory status.
We are now. Thank you.
So excellent. So getting to sort of the crux of it now. So Football Index was allowed to trade for almost 4 years before the Gambling Commission became aware of the online trading platform they had allowed. So Football Index received a license in February, March 2015 for a UK-based company. Within a month, they'd sent a key event notification, the correct way of informing the Gambling Commission. They said, oh, we'd like to update the rules so players can buy and sell shares. It didn't just go into a black hole. The Gambling Commission sent an email back going, yeah, that's great, all approved. Then, which is very common with gambling companies, they decided to create a subsidiary company offshore in Jersey. A lot of gambling companies are either in Gibraltar, Malta, Jersey, and they had to submit the application again. Now, what happened then is that they didn't put that trading of shares in the business plan or in the application data, but the independent report that was published did confirm that the Gambling Commission, because they knew the parent company, didn't really examine the application in great detail. As part of the application process, there's a live website that is tested by an independent test house. All over the front page was trading platform, the ability to buy and sell shares, and the Gambling Commission still signed it off. So that is the grey area. They've said we were not advised by Bet Index, but they did license the Football Index product, the platform with trading, to the parent company. So they actually had 2 bites at getting this right and failed to get it right. And that is gambling and betting specific. But from day one, there should have been some mechanism to go, hang on a second, this is totally out of kilter with what we normally regulate. Who do we speak to at the FCA to see whether there is, you know, it fits within their remit? Because 3 or 4 years before Football Index, I mentioned Adam Cole, the founder, he'd been floating a celebrity index platform and had actually gone to the FCA first. So it was obviously in his mind and his advisor's mind that this did need some form of FCA approval. So rather embarrassingly for the Gambling Commission, it was actually the French equivalent, Argel, who actually contacted the Gambling Commission and said, do you know who Football Index is? They're pretending to be licensed by you. Presumably because they couldn't believe it had been licensed by anyone. And the Gambling Commission said, oh, yeah, they have been licensed by us and they're trying to be innovative and turn it into a betting platform. Well, that's 4 years after you license it. If you're turning it into a betting platform, what was it beforehand? So all of these things have come out through freedom of information requests and weren't really challenged in the independent report. Again, I'll touch base on it. It was done in 6 weeks. It was drafted. It actually went through, is it the maximalization process, I think it's called? That took longer than actually drafting a report. I compare it to the Dame Gloucester report on London Capital Finance, and it's like chalk and cheese. That took over a year. They spoke to consumers, they spoke to solicitors, they got independent advice. They challenged the answers that the FCA gave. There was none of that in the report with regards to Football Index. So what did the Gambling Commission do? Well, they did have concerns that the platform they had licensed and enabled wasn't within their remit, and initially then contacted the FCA in May 2019 to discuss a solution. So from May 2019, the FCA became aware of Football Index as a platform. Thanks, Andy. Right, bit of a busy slide, this one. It got a little bit small. So as I said, the Gambling Commission initially contacted the FCA in the middle of 2019, 29th of May, and they had telephone conferences between regulators throughout that summer. Surprisingly enough, when I phone the FCA, they always say phone calls will be recorded and monitored. None of these, the FCA had no minutes to these calls. None were provided. The Gambling Commission had written notes. So again, it does seem strange that such important sort of lawyer to lawyer calls involving the FCA weren't recorded, but that's just an observation. In September, so in September 2019, so we're talking, what, 18 months before the collapse of the platform, the FCA provided the Gambling Commission with a substantive response that the platform should be dual regulated. So as far as I'm concerned, from that date, the FCA understood the platform and had some culpability to what happened. The FCA had many departments involved in this, and they just didn't speak to each other. So the Unauthorised Business Department was first made aware of Football Index in August 2019 as the General Counsel Division, the only department within the FCA that come out of this for any credit. They were on the ball all the way through this 18 months. They emailed the UBD to say that it was an Article 85 investment, which is correct as far as I can tell. UBD said we'll contact the customer, Football Index, and get them to authorise their position. They never did. They never wrote to them. And then allegedly, because once again, there was no recordings or minutes of the meeting, UBD then started it in spring 2020, between February and June, to state that they weren't taking this forward. It didn't meet their regulatory appetite. It didn't meet their priorities. There was no imminent loss of funds at that time that they could identify, and that the Gambling Commission were best placed to take it forward. The Gambling Commission have a different view. They never understood that the FCA weren't taking it forward. And despite what I've just said, the FCA continued to still be involved for the next year until collapse. So the last paragraph in this, or the last heading, FCA inaction. So the UBD did not write to Football Index in October 2019 as promised, but they did agree internally with the General Counsel's analysis that the firm is breaching Section 10, I presume, of the Financial Services Market Act 2000. Internal emails from the General Counsel Division were ignored for weeks at a time, with multiple chaser emails sent. The Gambling Commission were then chasing the General Counsel. He was then chasing unauthorised business. Nothing was happening. As I said, we get to February 2020. The UBD states that while sport betting indices do breach FSMA, the approach is to try and avoid getting involved in sports betting. Well, that's not their decision. That's not, Treasury and government does not enable them to choose what's within their regulatory perimeter. And Nicola Rathie has confirmed this recently. If it's within their perimeter, they should be taking action. And then the 4th of March, the UBD states, this is not about whether activities fall within scope, whether we are likely to prioritise. The Sheehan report has quite a lengthy timeline of the FCA actions or inactions. It goes over pages, and a lot of it is around this is an inconvenient position. It's all about the regulators having a tough time with it, not about the protection for consumers. That was never really at the forefront of the regulators' minds. There was more of a to and froing about the legal ramifications and the legal definition of the product. Right, so my mouse keeps failing here. Apologies if I'm slightly behind you guys. So can we have the next slide, which I think is that entitled FCA in Action?
Yes, it is. Yeah.
And then the next one again, yes. So these form the basis of my complaint to the FCA, which I submitted in September 2022. So I accuse them of prioritising appetite over legislation. As I just said, actually, the independent report that was published in September 2021 provided a comprehensive timeline of the FCA's inactions, but one thing remained constant until its collapse. The FCA always stated to the Gambling Commission that Football Index needed their regulation in part or in full. So they never signed on that whilst the platform was active. You can probably imagine what they did after the platform collapsed. They were solely concerned with their perimeter, than consumer protection. You know, they did not want to get involved due to their internal appetite and preference to avoid this type of sports indices. Leading law firm Michon de Rea actually did, there's been quite a lot of law firm write-ups about this, and they actually stated on the website, FCA a reluctant regulator, and basically confirmed that they do regulate this type of activity, and certainly regulate the activity that they opined on. They actually gave me a definition of the product after about 2 years of trying. Next slide again, please, Andy. Right, so I chose this picture myself. So CFD, contract for difference. So this was like the post-collapse action. So Football Index quickly unravelled, probably from July 2020 through to March 2021. All the time the regulators were sort of playing telephone tag and arguing about the legal definition and who should regulate what. Football Index was losing money. So there were two reasons for that: a lack of consumer confidence, competitor markets. So that was when Bitcoin was starting to grow and everyone was buying digital apes and NFTs for hundreds of thousands of pounds. I think even John Terry, doing a football analogy, he launched them and they lost like 99% in value after a few weeks. So they stopped getting these fresh deposits. People thought, well, actually, I'm not making money on Football Index anymore. I'm going to start buying Bitcoin. I'm going to start speculating here. I'm going to start putting money into that. And they also lost control of the pricing. So whistleblowers who spoke to the solicitor that was looking into this said that this, what do I call it? This pricing algorithm, and the Sheehan report confirms that, they could change it. So they had the ability to change prices without demand. So they were manipulating the market. They employed a market maker from 2018 who took money out of Bet Index, so staked funds, and then traded against consumers with information that wasn't open to us. So I've accused them and asked the Gambling Commission to go inside the trading and market manipulation. What's the word I'm thinking of? Sorry, my mind's just gone blank then. So I've accused them and said they were actually doing this. And these are the comments from it, which are obviously frowned upon by the FCA. So CFD, contract for difference. So in March 2020, the Gambling Commission got legal opinion on what Football Index actually was. And that came back as a contract for difference. There was no leverage. So you couldn't have your 10 times leverage or your 30 times leverage that you can with traditional CFDs. And I didn't think it was when I first found this out after the collapse. But if you actually read the definition of CFDs and spread bets, even though they're leveraged products, they don't need to be leveraged to meet that definition. So what happened post collapse? Obviously, ministers contacted Nicola Rathie. So on the 24th of March, I received this through a Freedom of Information request. Rathie wrote to the relevant ministers at the time, confirmed that sports or non spread can be a specified investment if it meets the criteria of the CFD, which is what the Gambling Commission had legal opinion on. Yeah, that's what I just said, actually. Then things get interesting. I mentioned that the General Counsel Division of the FCA, the only people who actually did their job properly. So in May 2021, the FCA only went to leading counsel external advice after the collapse of the platform. I've you can't get copies of this due to legal privilege, but leading counsel advised the FCA that no part of the Football Index product fell within the FCA's regulatory perimeter. Obviously, this contradicts the position of the FCA during the platform's tenure. 3 months after the collapse, on 23rd of June 2021, Nicola Raffi announced the recent departure of Sean Martin, who was the General Counsel. Adam Cole had actually contacted Sean Martin directly in September 20 about where the platform should be regulated, and it was Sean Martin who went back and said, yes, this is 100% FCA regulation, and no, the trading aspect of the shares does not make it FCA. It would be, as I said earlier, just the original business model. Obviously, this is not good news for Adam Cole, but he got it from the top. He got it from the main man at the FCA. And he was gone within 3 months. The CEO of the Gambling Commission was sacked straight away. Sadly, from what I can see, Sean Martin, was this news to you, Andy, from any of the other cases that you've taken on? This news about the General Counsel.
There are certainly some patterns in relation to what you're talking about. Let's describe it in that way.
Okay.
Thank you, Dave. Thank you.
Okay, but I asked for a copy of his resignation letter, which wasn't, and I got a freedom of information request on the HR. So Sean Martin didn't resign or tender his resignation until 2 days after. So that seems to me compromise or settlement agreement. So it's strange that he went when he was the only person who actually understood the platform and did his job properly. So yeah, I thought I'd just raise that to see if it's relevant for any of the other cases that I know Andy's has through the APPG. As I said earlier, I complained to the FCA, and it took 11 months and a couple of conference calls with the complaints leader there for me to receive a complaint letter. And I fell off my chair when I read it, that Football Index was a sports spread bet and therefore was not within the FCA perimeter. Well, I don't do spread betting. I did a little bit 25 years ago, and it proved to be quite costly, so I didn't do it again. But even I was aware that the FCA regulate sports spread bets. So the fact that they said we didn't take regulatory action because it was a sports spread bet, even though we regulate sports spread bets, just seemed to me a bizarre response. It was almost like it was the least worst option that they could possibly advise me of. Yes, please, Andy, next screen, please. Again, a further report. So the FCA started publishing its perimeter report in 2019, in June 2019, and the subsequent one on the 29th of September 2020. There was no mention in the perimeter report of sports and non-financial spread bets. However, by 2021, there was a nice paragraph about sports spread bets and non-financial spread betting. And it actually stated this issue was first publicly raised in September 2020. That's the only date that I could find anything that corresponds with that date is the advice that Sean Martin gave to the director of Football Index. Nothing publicly seems to be stated. And clarification from Treasury regarding the perimeter around this would be useful. So that is the first time I can find a date which shows that the FCA started to challenge or want guidance from Treasury about these type of products or index specifically. How the Football Index was a spread bet, I think it was just a standard, bog standard C10 derivative. If you really want to be, if you want to be anal about it, I've looked into this. However, if that's the definition that the FCA have come up with, I'm not going to argue with that, because in my mind, it still shows they should have done something about it. I can't find any differentiation in legislation between financial and non-financial spread bets. I'm unable to find any changes in legislation or Treasury guidance regarding the regulation of sports spread bets. It just doesn't exist. The FCA have licensed and continue to regulate the two existing sports spread bet providers in the UK. And the Gambling Commission and DCMS published a gambling white paper maybe 2 years ago now. And it makes no mention of any change to sporting spread bets or non-financial spread bets. It's just not mentioned. It doesn't say it's going to go back to, it's going to stay with the FCA. It just makes no mention of it. So again, I can't see how the FCA can say they don't regulate this. Right, I put it in comments, but next slide, please, Andy. Evidence of FCA lies. Now, and if you made a mistake where a consumer or consumers were financially worse off, you held your hands up, you apologise, you made sure they were immediately correct, and then you put them back to the position that they would have been if the mistake hadn't happened. That's redress. You can then provide gestures of goodwill on top of that for the inconvenience, etc. But this hasn't happened, far from it. So the FCA have written to MPs. I've chosen two, one in 2022 from Emily Shepherd, who's the Chief Executive Officer, no, COO, sorry, and Director of Authorisation, so she would know what she's talking about. She stated that the product was outside of the FCA remit and did not require authorisation. Not that we felt it's outside our perimeter, because they could do that. Whether it's right or wrong, right or not is another matter. But they specifically stated to a serving MP that it was outside of the FCA remit. And then this is important because there's been a couple of letters recently. I know Andy mentioned around, is it the 1st of January 2024 in terms of the FCA's transformation programme, and are they now, have they learnt the lessons, etc. So Lucy Castledine, who's the Director of Consumer Investments and lots of other things, but that was the main part, she stated 2 months ago, 21st of February, that Football Index was never nor needed to be authorised by the FCA, and that we do not agree that the product fell within our perimeter. So that's kind of okay, that second part. That's their feelings. However, it did need to be authorised by the FCA. And then finally, for this slide, I received a response from the Financial Regulators Complaints Commissioner in September 2024. I only found out quite recently the FCA did do a one-page response. But again, they stated that BetIndex, who were the Jersey-based company, operated a gambling product. I don't think they did. It was a derivative. And so was not regulated by the FCA. And then again, they say we will also continue to engage with our regulatory partners and Her Majesty's Treasury about gambling products. Again, I don't think that is technically true. Sporting spread bets come under financial services legislation, and they have, lots of the risk profile and the parameters are very similar to that side of product, financial spread bets and contracts with differences and everything else. Thank you, Andy. Evidence of spread bet regulation. Well, there's lots in the FCA handbook and the perks and everything else I've gone through, and it would appear that spread bets were designated to the FCA in 2000, and there was a test case in 2003 with City Index where the FCA were involved in the litigation. So they were aware then of what a spread bet was. But more recently, and sort of less technical and less anal, I suppose, there was a Competition and Mergers Authority report, so a government-sponsored agency. I mentioned there's two providers in the UK of sporting spread bets. There's SpreadX, that also do fixed odds gambling and financial spread bets. And then the name kind of gives it away, Sporting Index, they only do sports spread bets. They are both regulated and authorised by the FCA. On the 22nd of November 2024, a 252-page report into the merger of the two companies mentions the FCA and repeatedly states or confirms that sport spread bet providers must obtain FCA authorisation. Knew about this report because they actually provided evidence. It states in one of the pages. So, if they're saying to me in 23 sports bets within our perimeter on our responsibility, why are they engaged with the CMA? And then again, since the FRCC responded to me, Nicole Rathi-Hillier and the House of Lords equivalent, in a letter which he published, he refers to the report from the FRCC and the importance of seeking clarity from government. But as I've already said, they already have this. Treasury have never turned around and said, you don't regulate this anymore, as far as I can tell. And this is where I am now with government in terms of specific questions to Emma Reynolds and the Economic Secretary Treasury. Who regulates spread bets? Not what appetite for the perimeter, who regulates it? And she's avoiding the question, which is disappointing. That's why I think MPs need to have the questions drafted by us, whether it's written questions that are published online, or indeed if there's select committee hearings, which and I discussed offline earlier. I can't find anything to say that sports spread bets are outside the regulatory perimeter. There's a precedent. There's recent evidence that I've just mentioned, and someone kindly did a really deep search AI check, which shows that the FCA are responsible and should have protected consumers and taken action. I've never said that the FCA should have regulated Football Index. It was unregulatable. It could not be regulated because they controlled everything, the market maker. The FCA would, but what the FCA should have done is looked at it and gone, hang on a second, this is dangerous. This is not fit for purpose. This is a danger to consumers, and they should have suspended the market straight away. Because they didn't, we are now, unless there's a pot of gold somewhere that's been squirreled away, or predators sue the directors for their personal assets successfully, we're likely to get back less than 1%. The lawyers will get more than us. The liquidators will get more than us. Government have got more than us. You know, they paid far more gaming duty. They paid nearly £18 million in gaming duty during the tenure of the platform. And HMRC won't even engage with the liquidators to pay back 1.2 million they've identified. So everyone's gained for Football Index apart from the consumers, which kind of sticks in the throat a bit. And I think I'm nearly there now. You should probably be glad to hear I've gone on far longer than I intended. So collapse of Football Index, 2 screens, Andy, I think, please. Are you there? So the chronology of events, I found out later that the company traded really well during COVID. It was after football recommenced that the company started to lose money. And the reason for that was the actions the company took in conjunction and authorized by the Gambling Commission. So the Gambling Commission did what they called a deep dive, a detailed financial assessment. It was horrific. There were pages missing from the accounts. This is basic stuff that local business managers get taught. You know, the accounts, you need the full set of accounts. What's been hidden if a page is missing? They didn't understand the platform. They thought it was fake money. They then licensed the market maker. They provided him with a Gambling Commission license, and they allowed what was already a trading platform. They allowed it to become a fully fledged order book market with volume showing, which is why I've chosen that picture. So actually went away from any semblance of gambling. And I think the Gambling Commission were trying to get the platform into a position where the FCA would take it off their hands without thinking about the consumers and the protection, and the fact that the Gambling Commission and the operators of the platform didn't have the financial strength, they didn't have the knowledge, the know-how to build platforms and to put this into and it was just carnage. The last 6 months of the platform, it was just constantly dropping, people manipulating the market. The market maker at one stage owned about 12% of all shares outstanding to try and bolster prices. I mean, I won't go into too much detail, but to me it was all illegal, but they just seem to get away with it. There's been no censure for the directors other than losing their Gambling Commission licenses. Yeah, and then there'll be about half an hour more for questions. So the collapse of Football Index in March 2021. Andy, next screen, if you haven't already done it, please. I've already mentioned £124.5 million worth of contractual positions. I've already mentioned the independent report that was published in September 2021. It was highly critical of both regulators, but there was too much. There was too much in the report where it says it's not clear to the review, or information wasn't held. There's too many things where I think that should have been challenged with more time. And there was one example where there was an email trail of 4 emails. I mentioned earlier, the French regulator. The bit where I quoted earlier, oh, Football Index, we're working with the operator. They're trying to be innovative and turn it into a betting platform. The top 2 emails from the email trail were in the Sheehan report. The bit that I think is really kind of quite, it's it doesn't paint the Gambling Commission in a good light to say we're turning it into a betting platform in 2019. That bit wasn't in the report, and I question why that's the case. That should have been, if one email from an email trail was in it, the bit that was really kind of painting the Gambling Commission in quite a bad light and showed that they just didn't have any clue what they'd licensed and how to get out of it, I think that should have been in there as well. So what was in the draft was edited out of it. And I've mentioned the customer impact. So I've talked about, lost house deposits, savings, deposits. I've talked to people who've lost 30,000, 40,000. A couple of attempted suicides, a couple of divorces. A chap down in Wales had 10,000, would have paid for IVF because he couldn't get to it and it had lost. His wife left him because they couldn't have a baby. 3 failed attempts, 3 miscarriages. So it has been really tough to sit in with these MB calls. Predominantly, I said with sort of 30 to 40-year-old males, a lot of tears have been shed by the victims, and I do feel that due to the regulatory failure, not the collapse of a betting company, that is why redress should be sought. And I think we're nearly there, Andy. A few more slides. Yeah, there was a few actions there. Not important. I'll go across that one. Football Index Action Group. So again, a couple on there. So the sole aim is redress. I don't care if people go to jail. I don't care if people lose their jobs. The reason for that is the initial assessment by the Gambling Commission was heavily flawed. It failed to spot the trading aspect of the platform, despite multiple evidence that it was there. And it was a financial services platform straight away. The lack of a joined up approach within and between regulators, I've touched on that. And consumer protection came last in the negotiations between the two regulators. They were more interested in as I said, the legal definition. How redress should be funded. So next screen, please, Andy. When I met my MP spring 2022, he said, well, why should someone struggling with cost of living crisis fund your losses? So I said, well, the FCA do a lot of good work. They raise a lot of money for Treasury. So into this again, this decade, they've raised over $1 billion before enforcement costs, goes straight to HM Treasury. My argument is that Football Index is looking for what, 12% of that, but that sum of money there could right a lot of wrongs for regulatory failure in terms of collateral and everything else. So it was decided that London Capital Finance customers should be redressed. What made them special? Why have other consumers not been compensated? And that has been my precedent all the way through this. The last bit isn't really relevant to today's call. I added it in. Future for gambling and financial gaming platforms. Oh, one bit is actually. So people have tried to replicate Football Index, and there's a platform called Stocks FC, which is an English guy. I've spoken to him several times. Nice guy. His heart's in the right place, but he's got Dutch funding, so it's a Dutch company. The FCA are investigating him now, and it's exactly the same type of platform. There's a few slight differences around the dividends, as I've said, the daily payouts, and it's on the blockchain. So are they NFTs or crypto, which the FCA are kind of in and amongst it? But the Gambling Commission are looking at something and taking a provider of NFTs to court, and that was only mentioned in September 2024. Court cases coming up in June this year. But when we met the CEO in November 2021 of the Gambling Commission, that name came up and it was one they were looking at. So that was 3 years for them to decide we do need to take action against this company. And for the FCA to say that sporting spread bets is the definition of Football Index and we don't regulate it, and then to be looking at Stocks FC, both of those things are really contradictory. It just shows that lessons haven't been learned in terms of quick, decisive regulatory action to protect consumers, because so rare, which is the Gambling Commission one, has been labelled a poly. I think 95% values have been lost from the peak during COVID or the year after that. And there will be providers out there who want to stay unregulated. And I put a Wild West picture there because I was in a chat for one of these providers and the consumers didn't want it to be regulated. They said, no, we like the Wild West. We can make more money this way. So, and that's it. So the conclusion, from incomplete applications to market manipulation, the directors of Football Index acted appallingly But that's why we have regulators, is to protect consumers, to make sure that the providers are doing the right job. All the Gambling Commission did was seem to rubber stamp everything they did. They didn't challenge the application. They didn't challenge the financial assessment. They just took their word for it and didn't do anything to protect consumers. The FCA had no interest, proactivity or responsibility from that regulator, who I believe had legislative duty to protect consumers from that type of product. It was interesting. There was they made a big song and dance about 3 Cypriot CFD providers that they saved £8 million worth of deposits in 2022. I've got the details somewhere. I didn't think it was relevant to the slide. So whilst football index was not being investigated, £124 million, the FCA were pursuing £8 million worth of consumer exposure and making a big song and dance about the enforcement they took. So they should have stopped football index in its tracks. If it had been stopped even a year before the platform collapsed, I reckon we would have got 27 to 35% back as a return. I mean, that would still hurt, that would still sting in terms of a loss, but it wouldn't have been the complete disaster of 1% back. I mean, you know, I'm not sure what Andy did in financial services, but from a corporate banking perspective, for creditors to only get 1% is a phenomenal collapse of a company. It's just unheard of. I mean, even London Capital Finance, I think, got 20% back from the liquidation. So this has been a complete disaster of a story, and why it deserves, I think, as Andy mentioned, is a scandal. And I think that's it for me. You'll be glad to hear, I'm sure, after 50 minutes, an hour. Thank you for listening.
David, that really has been a spectacularly clear explanation of everything. Can we once again show appreciation to David? David, I've got a couple of questions before we open it up to everybody else. So first question is,
of course,
in broad terms, I think what you've explained is that the FCA internally concluded that the football index did fall within the perimeter and they therefore should be regulating it. Then after it collapsed, they changed their mind. That in a couple of simple sentences seems to be the overall pattern. Is that correct? Yeah.
Yes, that's right. Yeah.
Oh, okay. And we can imagine that when it did collapse, there would have been all kinds of conversations within the FCA. This is obviously conjecture, we don't know, but you can imagine there being all kinds of conversations within the FCA about what to do, given that it has collapsed and people lost money. And presumably there would have been conversations around, did we have to regulate this? Were we supposed to be regulating it? Maybe we should have done, but if we say that, we're going to be in a lot of trouble, etc., etc. I imagine this has been quite a challenging situation for the FCA. The bit that you've explained that's of particular interest to me, is the idea that there's been some duplicity or miscommunication about what they thought and when they thought it. In your view, David, do you think the FCA is trying to fudge its way out of this by giving a different narrative to what actually really occurred?
Yeah, 100%. You know, all the way through the platform's tenure, when they first gave the Gambling Commission and the customer steer, they said it needed to be part regulated. They then turned around in September 2020 and said it should be fully regulated by the FCA. And then the Gambling Commission started to panic and disagree with it, because obviously then it looks really bad on the Gambling Commission. So they actually fought the FCA internally. I didn't say this earlier. So the Gambling Commission was saying, well, hang on a second. No, we regulate the stakes and we regulate this, and you should regulate that. But Sean Martin, who given that advice in September 2020, he said, no, 100%, this should be the FCA. And that was, as I said, conveyed to the customer as well as the Gambling Commission. And it just seems to be very strange that his departure was announced before he actually signed his resignation. So pure conjecture. I don't know who's online and whether I'm getting myself in trouble. But the leading council, they only forecast, I think, potentially stuck to his guns.
You see, a lot of people will be saying to themselves, football index was high risk, pretty different, pretty novel, pretty unorthodox. People lost a load of money. that's down to them making bad investment choices. That particular part of this isn't really of much interest to me because everybody will have their own opinion about what is high risk, whether somebody should invest in something or not, whether this is gambling or whether this is betting or whether this is investing or whatever. Everyone's going to have an opinion about that. But the bit that's pretty binary for me is if there is evidence supporting the idea that the FCA has in some way been duplicitous with its narrative, because you can't put your trust in the regulation of an investment industry if you have a regulator who says X when actually it's Y. It just doesn't work. There needs to be trustworthiness in the
Yeah,
system.
what was interesting was that there was three what's the word, competing legal opinions. As I said, the Gambling Commission thought it was a CFD and that should be dual regulated. The FCA thought it was something before they come up with the sporting spread bet, but they provided individual guidance to Bet Index. It should be what's the word? It should be regulated solely by them. Bet Index also had council opinion that I haven't seen, which stated that it should be 100% within the Gambling Commission. Now, the most convenient result for the FCA would have been to have chosen Bet Index's council's opinion or got someone to state that it was 100% a gambling product. As I said in the presentation, I think the FCA chose the least worst option, because if you look at the definitions of fluctuations and looking to avoid a profit or secure a profit, avoid a loss in terms of the derivative suite of products, because a derivative is then subsectioned into different products, but sporting spread bets and CFDs are subsections of derivatives as far as the FCA's legislation and the handbook shows. So CFD, they 100% regulate. Financial spread bets that 100% regulate. So they obviously have looked to try and maybe, I don't know, play on the ignorance of MPs and play on the ignorance of consumers. Me, in terms of answering on that question, that is my gut feeling on this. I think the FCA know they should have taken action and have chosen the least worst option. And I don't trust them. 100% don't trust them.
David, thank you. Just before we pass to others for comments and questions and ideas, you indicated your background. You know a bit about the market, the sector. Tell us a bit more about your background, David. Thank you.
So I joined Barclays in 1991. I then joined HSBC in 2014 as a corporate relationship director. So I was quite good at reading balance sheets and profit and losses. And I picked apart the fact that the Gambling Commission did nothing useful in terms of their assessment. I couldn't understand couldn't get to the bottom of the financial forecast provided in 2015. It just didn't make sense. It didn't tick the boxes they required. And I looked at the financial when it went into administration. There was somebody who actually put money in, was going to buy Bet Index, and then pulled out because of directors of the parent company. And I got the financials from BDO, and it just couldn't work. It didn't have a viable product, and destined to fail. This product was always going to collapse. It was just a question of when, and that council's advice to Lee Day, the firm. So basically, the Gambling Commission regulated a Ponzi scheme, and the FCA did nothing to assist them. Because what is important, I didn't mention this, but I did make a note, is that Nick Elrithy has mentioned recently that he can't take action outside of the regulatory perimeter. So I think funeral plans and buy now, pay later came up in Treasury Select Committee call recently. Yeah. But the Gambling Commission, even though they'd licensed Football Index, they couldn't take action against something they don't regulate. So they couldn't take action against the trading of the shares or the portfolio. They couldn't say to them, stop that. They didn't have the legislative powers to do so. So the Gambling Commission needed the FCA to take this on or to do something, if that makes sense. So so basically they were hamstrung by legislation, presumably because nobody in 20 2003 for the Gambling Act in 2005 would ever have thought this would be the case. But again, legislation wasn't robust enough to stop people taking advantage and kind of falling between the cracks of the two.
For sure. Thank you, David. Let's see if others would like to come in with any comments and questions. Please raise your hand if you'd like to, either digitally or literally. Feel free if you want to come in with anything. Whilst folks are mulling that one over, David, what do you think is going to happen next? What's the next stage in this?
Well, for me, it's been like a huge funnel of so much information at the start, because when the platform collapsed, our anger as a community, and unlike the postmasters, who were a disparate community, who they didn't know what was happening to each other. They didn't realise, one guy in Hartlepool losing his post office and getting taken to court and going to jail didn't realise someone in Devon was going through the same thing. Football Index had a very vibrant, close knit social media community. So for the first days after collapse, it was, well, the directors to us, they say we were in strong position, things are going well, etc. The Gambling Commission, about 3 or 4 days later, said we're investigating it for 2 years before its collapse. And, the loud voices like myself in social media are like, whoa, hang on a second. It's all very well. If the Gambling Commission had come out and said, you know what, we had no idea this had happened. We did a financial assessment. They had £30 million in the bank a year before. Everything was tickety-boo. We're as surprised as you are. But the actual fact that it was being investigated for 2 years before any consumers knew what was going wrong, that is why I will push for redress as much as I can. And so where I'm trying to get to at the moment is this funnel's gone down and down and down. And where it is now is to get Emma Reynolds to answer the questions you've been asked, which is, who regulates sporting spread bets? And if it's not the FCA, when did that change? That's what I want to know. And she needs to be pressed. She needs to be pressed on that, because she's not answering the question that's been put to her.
And perhaps yes. So Darren Jones is in the same area. Presumably, she reports to Darren Jones, I think, who in turn reports into the Chancellor.
Reports to Rachel.
Yeah. This is clearly a very problematic area for the FCA in terms of understanding what's happened and whether they were or weren't on the hook for it from a regulatory point of view. I'm going to ask once again, does anybody have any comments or questions they want to come in on before we bring tonight's conversation to a close? Adrian Gatton's got his thumb up, but Mr. Bobby Ridaway, let's go to you, sir. Thanks, Bobby.
Yeah. So how does the FCA? That was a very good summary, and just say you have. I didn't know anything really about this, and so you've got at least one person whose awareness of this has been raised quite a lot. How does the FCA usually pick up companies like this? Is there a way that companies can effectively arbitrage the regulators, companies who don't want to do things properly and just operate? I mean, it sounds like with this one, it was so high profile that it just sounds really unbelievable that they didn't pick this up.
Yeah, I mean, both the Gambling Commission and the FCA have, I think it's called Horizon scanning software, which looks to pick up signs of unauthorized activity. I thought it was important that the FCA took action against these 3 Cypriot CFD providers at the same time as they had Football Index on their tests, because a concerned regulator making a introduction to the FCA, i.e. the Gambling Commission being the concerned regulator, this should have been top priority, and they should have got legal counsel opinions way, and not after the collapse. I mean, there was nothing in it for the FCA to say, oh yes, it was after the collapse. So I'm very dubious about that. But yes, I mean, they do pick up. They will get people phoning the FCA to say we've lost money, so they'll become aware like that. They do proactive searches as well, and introductions from action fraud and the police. So the FCA get lots of information. I appreciate they're very, very busy people, but that's their job at the end of the day. We're all busy people. We've all had more to do in our careers and our jobs since COVID. It's just the way of the world. I don't think the FCA can use. They say they've got to use their resources in the most efficient way, but my argument to that would be, well, you took action against 3 CFD providers and saved £8 million of exposure. Wouldn't a better use of resources, wouldn't that have been to understand the football index and look to protect the consumers? Does that answer your question, Bobby?
I think
Yeah.
it does.
Yeah, it does. Yeah, thank you.
Yep, brilliant. Okay, thank you for the question.
Indeed, thank you, Bobby. Nicola's put a question in the chat, which I'll read out for her. So Nicola asks, what, if anything, happened or didn't happen with the Jersey gambling regulator or financial regulator? So what happened in Jersey, David, if you know?
Oh, Jersey is a difficult sector or jurisdiction to get any information from. So it's quite strange because they were regulated by the Jersey Financial Services Authority, but that's the same. That's the equivalent of Companies House. So I think that threw a little bit of a fly in the ointment when they were looking to understand what was going on. The Jersey Gambling Commission have banned Adam Cole from ever holding a license again, and have suspended the license in line with the Gambling Commission. The problem is the regulatory returns in Jersey are literally 1 page. You just say how much your company's worth, I think, the net tangible assets, and sign it off, which is why so many companies, it wasn't even a tax saving because they never paid corporation tax. It was, and they paid gambling duty in the UK. Why they went to Jersey, I don't know. They only decided after they'd got the initial license for the UK parent. But getting information out of Jersey, I had lots of direct messages from people on X saying, good luck trying to find out anything in Jersey. But I don't think this is a Jersey issue. They were based in the UK. They were paying UK taxes. The Treasury benefited from the UK taxes. And it's down to the UK government to acknowledge what's happened and fund redress.
Thank you, David, and thank you, Nicola. There's a note in from you and what. Forgive me if I've mispronounced your first name, sir. So have any previous Labour MPs shown support? He references a Liz Twist debate. What's happening in terms of the Labour Party and any sort of parliamentary activity there? Any Labour MPs speaking up and speaking out about this?
Yeah, so I had a conference call with the Shadow DCMS team in early 2022. That was Lucy Powell, Jeff Smith, and a few others. And Liz Twist, has she now Keir Starmer's PPS. So I thought that was a great appointment. I could just literally get in Liz's ear, who I've worked with closely over the last couple of years, and she would just say to Keir, "Look, you're a father, you're a football fan. These guys have been let down. We need to put this right." But later in their manifesto, they'd redress football decks, have really changed their tact. It's so disappointing to see. And answers from Stephanie Peacock, who was the shadow gambling minister, and Baroness Twycross, who is sits in the House of Lords. Obviously, she's now the gambling minister. Basically said, "Look, we're standing by the Conservative government's decision, which was not to offer redress, and are hiding behind the independent report, which was critical and was very useful, but wasn't far-reaching enough." However, there are, I think, a lot of backbench Labour MPs are starting to show a bit of support, because I think they're worried they're going to be the next, what's his name, Jonathan Gullis, and be unemployable in 5 years' time if the opinion polls are correct and they don't get the landslide in the next election. So there are people asking questions, and there are people feeding into the APPG. So not all hope is lost, but Baroness Twycross won't even meet me. And Liz Twist went to meet her to ask her to meet me, and I've not had a response yet. And that was on the 3rd of March they had their meeting. So I'm guessing the answer is no. And she's written to me saying, "I'm not doing anything about it. I'm not meeting you." So I assume I'll have to continue what I'm doing, which is to try and get an answer out of Emma Reynolds via MPs. I've complained to HM Treasury. I've got a response coming back from HM Treasury due. I complained to state that I'd had no response from Treasury since the FRCC report, other than to say go and obtain a judicial review if you don't agree with the FRCC's answer. And I said, you missed the point. I do agree with the FRCC's response. I want you now to do what she said, which is to get regulatory confirmation about where this should sit. and to avoid it happening in the future. So at the moment, someone else could come in and do exactly the same thing as Football Index, potentially, and consumers could be unprotected again. That isn't lessons learned. It could happen again. Unlikely, but could happen again.
I think that's a key point, David. This is why your question to Emma Reynolds is so significant, because unless we know who or what is regulating this space, it's vague, it's uncertain. Nobody knows where they stand, and therefore, in theory, at least, something could happen again, or similar, or even the very same. Yeah.
So I mentioned earlier, unfortunately, not that now they're licensable, and there are 2 companies and potentially people who are unprotected. So through, which is why the CMA did a report, and Sporting Indoors as a company, people with exposure there may not be by the FSCS, based on the example I gave earlier. That's unacceptable as far as I'm concerned.
I understand that grayness, that lack of certainty is what nobody wants. Howard's put a note in the chat about the FSCS.
And it's you know.
Can I broaden that question? Not just the FSCS, but has the FOS been involved? Has anybody tried asking the Financial Ombudsman Service to intervene in any way? And what's the response been from the FOS?
I haven't. No. It's a good question, actually, because would FOS be able to state that this should have been eligible under the FSCS? I'm asking a question back. Sorry to answer a question with a question, but I will look into that. But no, at the moment I haven't done, other than just looking into it at a high level about what the options are and what the protection is. But as it wasn't regulated by the FCA, I think I'd probably get very short shrift from FOS. They'd probably go, it's not an FCA regulated company.
Perhaps ask the FOS the same question you're asking Emma Reynolds. Who regulates a space? If somebody were to spend money on it, where does the regulatory framework sit as far as this is concerned? Just an idea. Thank you, David.
No, that's a good idea, Andy. Thank you. No, thank you.
Adrian's put a note in the chat. He says, what if we keep getting met with a total obstruction by the government, FCA, etc.? Do we have other lines of attack, or will we eventually hit a dead end? David, what's your thoughts on that?
Well, I think what this needs is a documentary or a 3-part Netflix drama. I mean, I know the postmasters haven't got their money yet, and I think it was in the press last couple of weeks over the Easter holidays, wasn't it? They're what's the chap's name? The main man was going to start taking legal action against the government. I think the guy that Lee Mellor played in the drama. So yeah, I mean, it did bring it to the public attention. And I think on a different tack, to look at the impact that adolescents had on government sort of what's the word, policy in terms of putting it into schools. So we've had a 10-minute slot on just at the end of the World Cup. So what was that, December 2022? I have spoken to a lot of media companies, but production companies saying they want a resolution. They want a bad guy, an identifiable, like Paula Venables and the blonde lady with the Dutch name. They were the bad guys in the post office scan jiu-jitsu, and yeah, basically that's where we are with it. But I am speaking to people who are looking to put something probably. I don't think I'm going to get anyone to.
Okay, well, keep us posted on that.
But these things take time, Yeah, these things do take time, is what I was going to say. I mean, I know it's 4 years since the collapse, but you look at Postmasters, 20 years, Hillsborough, 25 years. It's just, I'm hoping I'm not doing this in my 70s, but I'm prepared to. I'm not just going to accept it because it's the right thing to do. I know it's a lot of money, but there is a lot of money that FCA raised. So there is an identifiable source, which doesn't mean the taxpayer can complain about it. The FCA did harm, not 100% of the harm, but they did harm taking action. And the FCA fines that go to Treasury, I think, should be ring-fenced to protect people against regulatory failure.
In bringing tonight's conversation to a close, I'll be asking David for his final thoughts in just a moment. But before we go to David for his final thoughts, I just want to compliment you, David, in how well you've put the presentation together, how well you've put the message across, how well you've been campaigning, both in the background and in the foreground around this. It's been very impressive, David. Thank you. It's been a pleasure meeting.
No, thank you as well.
David, your final thoughts before we bring the conversation to a close. Thank you.
What was interesting, Howard's just had a question pop up about his grandsons. Were they? It was about were under 18s able to gamble? So, whilst the Gambling Commission couldn't take action against Football Index for the stuff they didn't have regulatory control over, you know, the trading, as I mentioned, there was a whole range of regulatory returns where Football Index was saying they had identified 4,000 under 18-year-olds, which I think the Gambling Commission could potentially have used as an excuse. So there was more than one occasion where under 18-year-olds were on the platform, because I can see how it would attract youngsters. I mentioned Jadon Sancho recently. When he was 17, they used his picture, which isn't allowed because he's a minor and it's a gambling license product. So there was quite a bit in terms of they weren't running a tight ship. Behind the scenes, their regulation and their paperwork was poor, and they spent a lot of money on behind the scenes, compliance and everything else. They're spending tens of millions on compliance in Gibraltar. So it's a good question, Howard. Yeah, they did wouldn't say allow, but they did identify under 18s that were using the platform. Whether they lost money or not, I don't know.
David,
my final thoughts. Thank you so much. No, thank you so much for everyone who's listened. My MP said it was quite a dry subject, and I said sorry that the loss of 124 million isn't entertaining enough for you, but I do appreciate it is a bit of a tough listen at times. I try to make it as high level as possible. Thank you to Andy. I look forward to working with you, Andy, going forward on anything else as well. I know we've exchanged emails and other stuff. I'd like, if my experience or knowledge can help you with anything else, I'd like to be involved with the CTF. I think it's important. I will continue to share my updates on X. I believe in transparency and letting people know where we are with it, and I will continue to press the correct Ministers of State, i.e. Emma Reynolds, Baroness Twycross and Darren Jones, for those much needed answers.
Fantastic stuff.
I just hope nothing like this happens again, really. I just hope the lessons have been learned, but that's not acceptable for us as victims.
Fantastic stuff. David, excuse one further footballing pun. As far as tonight's session is concerned, you got the ball in the back of the net, that's for sure. Well done, David Hamill.
Thank you very much. No.
Well, good night,
thanks
all.
Everyone. Thank you.
We'll send a follow-up email over the next couple of days. Good night, all. Thank you very much. Well done, David. Cheers.
Bye-bye. Thank you.
Bye-bye.
Bye.